Here, remember to like and subscribe. Tell your friends if they're looking for stock advice. So you take a look here. We got a rough day going on in the market. SPY down 3.5%, just about 3.5%. You can see I have this 380 line marked here. This is a 3-year chart by the day. 380 represents 20% down from the high. That is what they call a bear market, ladies and gentlemen. This is going to be confirmation of that bear market. So if you look here, I'll zoom in real quick. If you look here, we touched it here, we flirted with it here, we touched it here, and now we're breaking through that support here. So back to that 3-year chart, beautiful uptrend we had before, post-COVID, but now we're doing the tightening and inflation is rampant. Friday, the inflation number is 8.6%. That's represent year over year. That's way hotter than they expected. It was also 1% month to month, meaning everything got 1% more expensive, basically month to month, somewhat. So, but still, that's insane. So this is falling through. We have a big Fed meeting tomorrow and Wednesday. We'll see what they have to say on Wednesday, if they're going to hike rates faster. What the charts are telling me is that you are now in a solid downtrend here, which I've not drawn on here yet, but I will. Solid downtrend here as we laddered down lower and lower, and we had falling wedge breakout, falling wedge breakout. I assume we'll get another falling wedge. I hate to say it, guys, but the next step here is 335. There's an air gap. You can see it. This is a volume profile. This is a volume profile. And we're just not holding that. It looks like we're going to close below, the 380 today, which is brutal. And if we do close below that 380, we'll be officially in bear market. It'll be all over the news. And there's not a lot of volume here to support the price and SPY. So maybe we get a little bit of a bounce. The Fed's doing something, but I would expect a gap down. The other thing that's not super promising is this MACD value here. So if we zoom in on the MACD, you can see we did cross back down, which is a bearish signal, right? And I had a video before. You can check it out on why MACD values matter. You see this cross up, told you that this falling wedge ended. This cross down said to you that this rally on that falling wedge breakout was over. Cross up, falling wedge breaking, and cross back down. You got to imagine we're going to get a big step lower, probably into this range down here. This 335 represents pre-COVID high, so maybe we'll find some support there. I don't know what that represents on the PE value right now. The PE ratio on SPY I think is at 19 point something. So if you go down another, another 10%, you'd be at like maybe a little over 10%. You'd be at like 17 PE ratio. So this is your 17, and this is probably your 15 right here. So maybe you see some buying in that level. But yeah, you got another 10% to go. So hang in there, guys. The only thing that might help us is this RSI being down in the 30 ballpark. So God willing, we get some good news out of the Fed. Or maybe we rally back up and close above that 380, find support. So if we close above 380, just so you know, we could consolidate up here and hold a little longer in this range. If we close below 380, then it's going to be a bloodbath, I think. So take the opportunity to buy puts when you can on the rallies, short-term puts, long-term puts, and hope this helps, guys. God bless.